Hello, this is Manish Patel with iMTF Trade. Today we're going to talk about the iMTF indicator that we have available for platforms. We've taken it one step closer to simplifying the process of trading by adding a lot of enhancements to our indicator. We added targets and we added a lot of optimization. So let me start by going through the indicator and step by step walk you through how easy it is to trade using the indicator for any instrument and any time frame out there in the world. Before we begin, this is our normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell a particular instrument. If you do so, you're doing it at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral out there, so we do support various charting and broker platforms out there. Today, we're going to be showing you the indicator on TradeView for example purposes. The best way to show you how this indicator is used to simplify trading for any instrument, any time frame, is show you a live example. Here's a live example of a Switzerland yen currency trade. This is a 60-minute. Remember, you could apply this for any instrument out there. The very first question a lot of traders ask is, should I be thinking buy or sell? When is there a setup there to start thinking to buy or sell? What we've done is we dumbed down that process by shading the backgrounds of the charts. Okay, in this example, you see the green and red. What does that mean? So here's what it means. When you have a red shaded area, you're going to think to sell. That means you're betting on the instrument going down. If you have a green shaded area, as you see here, then you're going to think to buy, betting on going up. As long as a shaded area appears, you could place a buy or sell order. If the shaded area is gone, that means there's no setup there at all. You need to move on to a different instrument and different time frame. Now that we know when a setup occurs, whether it be bullish or bearish from the shaded area, we need to determine if it's going to be good or bad based on forecasting. That's an optimization technique. Well, we've done that already for you. So what we've done is we added these crosses here in the shaded area. Okay. If the color of these crosses in the shaded are blue, it's a good setup and you could go ahead and place your order. If it's an aqua color, like a light blue, then you would not place an order at all. It's got a low probability of succeeding. It's got a high probability it's going to reverse. If you got a gray cross, then what happens is you have to wait to see if it does break out, and then at that point you could evaluate it. Okay, so if you want to keep things simple, just take only the setups that have the blue crosses in the shaded area, and those you know are going to be good setups and so forth. Now that you know if the setup's good and you're placing order, then you need to know exactly where you're going to place the order at. Where you know that is you look for these blue dots, not crosses, in the shaded area. Wherever these blue dots, that's basically where your order is going to be. For a red shaded area, that's going to be your sell stop order. If it's a green shaded area, such as the one back here, that's going to be your buy stop order. So the blue dots in the shaded area basically designate where the entry order is going to be. The green dots that you see are basically where your stop is. If it's a setup, then basically that's where your initial stop is going to be. Your conditional stop order is going to be there. Once you enter the trade, then you could use that same green dot as a trailing stop as the trade proceeds forward. So this covers basically the setup for the entire trade that you're looking at. Now we discuss when a setup is good. If setup's good, the entry would be at the blue dots, then the conditional order will be at the blue dots. The only thing that you're missing is where is it minimum going to go. Okay, so that basically is going to be wherever these crosses are, that's where it should go minimum at least. Now there's two words that we use, we call preserve mode or target. These will be targets if the higher time frame is against you. So if this is a bearish trade and the higher time frames are bullish, this would be more of a target here. If this was basically the higher time frames are with you, then what you'll do is you use this level right there to basically be a preserve mode where you would basically exit some of your positions, like 50% or 75% of your positions, and tighten up your stop right there. Okay, so that basically discusses everything for the order and the setup and everything there. Now let's go for entry. If price hits the blue dots, as it is in this example here, the shaded area will be gone because it's no longer a setup there. We've entered the trade. So we enter the trade here. My stop would be those green dots right there. Then what happens is we have an optimization now. When you enter a trade, sometimes due to volatility, the trade setup that you had can go bad, and we need to verify that. So as soon as you enter the trade, look at the cross, make sure it's still blue. If the cross is still blue, then you could stay in the trade. If the cross has gone aqua, then you need to exit the trade completely. Okay? Then what we've done is after that bar, there's the next bar that comes. So we have a 2-bar optimization. One is at the entry and one is on the next bar. As soon as this bar opens, check that cross again to make sure it's still blue. If it's still blue, then you're good. But if the cross on the second bar is aqua, then that means it can go for a drawdown. If it could go for a drawdown, that could sit there and reverse on you. So the best thing to do as a conservative trader is to exit the trade when you basically have an aqua on the second one. If you're an aggressive trader, then you could possibly stay in there and go through the drawdown if you want, but most traders will pretty much exit the trade. So what you're looking for, ideal scenario, is these dark blue crosses in the shaded area and then after the shaded area for the trade. That's your best trades out there. Okay, so this basically has gone through the new indicator and how it works and so forth. You still have all the overextension dots too from the indicator from before, where basically if you have a gray dot, it means extreme overextended, you exit the trade. If you have a yellow dot, that means you go straight into preserve mode and tighten up your stop. If you have a red one, you go to the lower time frame to manage the trade. If you guys have any questions, you could email us at info@eiicapital.com. Thank you.